that was a trading day. That was something special. Part of my head cut off there. The market chopped off my head today. How is everyone doing? Hello, hello. What a wild day. That sums it up. It was a fun day today. It truly felt like a roller coaster. Hey, traders, wild indeed. Welcome, Christoph. Welcome, Wavy. And Jake the Snake. Many patterns triggering today on my watch list. Great to build experience. Yes, you know, that's part of it. These markets will lend to a lot of patterns and a lot of experience. So, you know, this is the kind of market. This is some volatility. Oh wow, most fun I had in trading in ages. Yeah, well, strap in. We could be due for some more. I said in the morning stream to the ditches. Hello, Sashi. Yeah. Well, we had the little breakdown. Then we got the bottoming play, and then we sold back down the VIX. So we'll take a look at all this. By the way, I have my stuff back up, which crashed this morning. Distracted me in the morning live stream, so we'll go back through that. We had the FOMC minutes. We had Harker speaking. We had that op-ed by Dudley, the former member. So not a member right now, but you know, everybody's chiming in, trying to lower expectations on the market. And we'll take a look. Good afternoon, Mike and T. No fear yet. The Fed is finally taking seriously. Yeah, 95 billion. Yeah, that did surprise the market. That 95 billion. That was about the only thing that surprised the market besides the comments this morning. Can you go over some of the FOMC minutes? Yeah, we'll talk about it. We can talk about that. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers and viewers, please come back and leave some comments. A few more of you are. I'm still going to keep asking because it helps get this information out there to people. And it also helps to like the videos. So, where do we sit right now? Let's take a look. I already went over that. We have the FOMC minutes tomorrow. Let's see. We have continuing jobless claims, which is very minor. We have more Fed speaking right at 8 a.m. So we'll be on a live stream tomorrow, 8 a.m. Central. And then we got Bostic, then we got Evans, and Evans is one of the doves, so we'll have to see. And then we got Williams after the markets, pretty much. So, wow, we could be still in for, it's like Mr. Toad's Wild Ride. Mr. Toad's Wild Ride. Here's your heat map. You can see mega caps, some pretty decent selling again. So we'll peek in on those. Healthcare, remember we talked about that. When people expect a recession, healthcare outperforms, and that's definitely outperforming. Also, some of the consumer staples did pretty well today, and like MO, for example, Altera, we are long MO. Banks getting beat up. Credit card processors beat up. PayPal getting beat up. So that's where we sit. Some real estate still doing well. So, well, let's see. Fed loves to hear themselves talk. They are, I mean, you want to talk, I think they do. I think these guys just love to be on TV, you know, or on talking about what they think. Well, where were they when everything was running hot and they were, don't even get me started. About 80% of the 50 basis point hike in May. I'm surprised it's even that low, because if they don't do 50 points in May, they're going to fall farther behind in negative gamma territory. Now, if we do get a sell-off continuing, it starts really dropping into where it can definitely accelerate. Now, keep in mind, negative gamma territory can also amplify the rallies. So don't just think that's downward pressure. It can also amplify the rallies. Why I'm not super bearish yet, though, is because we're starting earnings seasons now. As we probably get going in earnings seasons, I'll shift more and more bearish. And depending when we do make the next rally, that's really going to be one of my gauges to help reestablish longer-term bearish positions. Here's what I'm talking about with the VIX, though. I mean, this is not fear. You know, we had this little thing. We had the buy, which the percent B buy, and then the double bottom, running up, hitting the targets, and then back down. This is not sustained fear in the markets, even with this sell-off. Look at that. And if you were even using the aggressive targets, it's right there. Boom, boom. It's virtually, I mean, there you go. There's still no fear. Now, if we start running back above here, especially tomorrow, I will pay a little more attention now that we've put in a nice little top. But we'd have to start getting a sustained. Remember, I was watching around 2450 area, 25. You know, it got rejected from those levels and backtracking now. So now is when I start paying close attention. That's what I will be watching. Let's see. We got Rich. Welcome, welcome, welcome. Is that a bullish flag on the ES daily chart? This is still the flag pattern I am watching, coming down, hitting the first target from that head and shoulders again that Rich had me go back and look at yesterday by pointing out. Again, wonderful member of this community. Thank you, Rich. Coming down, hitting that target, and yes, this is still a bullish flag pattern. And on the next rally, that will really be telling about how we're going to perform coming up into the next couple months. So this is why, you know, there was intraday bearishness today. I was watching for the bottom. All right, we had, where are we? Right here. Let me get back in the Wayback Machine. Here's my Wayback Machine. We were trying to get something going. Then here was the little sell-off into the open, or after the open. Jeez, where are we? Here we go. So little sell-off continuing here at the open, but then catching on this 44.58, bouncing. Then we got the major volatility with the FOMC meeting minutes. You see coming back down. I was watching this 44.44 area, bottom right around here for the bottoming. And then we got some momentum. Then we reversed the momentum. And now we're just in this huge chop. But even with this, with the sell-off again, fear didn't kick back in. Again, there's still, that's why I can't get super bearish yet. There's still too many. This is a dip. We're still buying the dip, even though the Fed's doing everything they can to talk down this market. And I think they're going to keep pressing it until this market takes a nosedive. Yet, there's still too many people. Buy the dip, buy the dip, buy the dip. Now, what's also interesting to me, cycle indicators, which were overbought and rolling over, have now entered some oversold conditions. So I am definitely watching for a bounce play today. Now we start breaking below today's low in either Europe or tomorrow morning. That's when I will still be willing to play it to the short side. And you see harmonics. We have the next target for the head and shoulders, and we have the intermediate target, 44.2650 and 44.08. But even though we dip below the channel lines I had drawn, still closing inside of it. Now, we do have overhead resistance to get through. You can see here an advanced clear path. The key area, I'm going to bump down this line a bit, right around, 45.10. That's the key little level I am watching to the upside right here, and we'll refine that tomorrow. But if it does form a larger term bottoming pattern and we start rallying in Europe, I'm watching upwards of these levels, and that also holds true for tomorrow. It really takes a push during active sessions, which could be European Open, below 44.44 before, again, I'd be shifting to short-term bearish, and then we'd reassess the longer-term position. Excuse me. But yes, this is a flag pattern, a flag pullback pattern, starting to get into some oversold territory. Now, there would be technically a daily buy signal on a close above today's high. Don't know if we'd see that tomorrow. Also, there was going to be a 4-hour buy signal. That's still technically in place, but we did not close on this last bar above there. And I would not bother trading that in the Asian session. It would just be into the European session for a bounce play there. Nasdaq, which the double coming down just below the first target and then finding some support. Again, I updated the harmonics. I was working off 44.27, and then I had this cluster area about 14.375, 14.4. You can see we put in the bottom and we got the volatility with the FOMC minutes coming back to that 1 hour rotation zone and then just settling roughly at that harmonic. So if we break below this low now in Europe, again, same principles stand what I talked about with the European session for the S&P. I'm watching the same thing for the Nasdaq. Below 14, let me give you the exact low, below 14,394.75. Then I'm really, I mean, we could see quickly if we do get down there, it could complete the double pattern before a bounce, before a longer term bounce. Where would that take us in terms of pullbacks? It would still be above the 50% level of this whole move. And then I will watch again for the continued rally and watch to establish some of the longer term short positions. Again, this is just short term trading for me at this point with earnings season starting next week. Aggressive buy would be above today's high. And also 4 hour did not get a close above this bar, which was an aggressive entry. And so still, I will watch for that during European sessions. The Dow actually holding up the best, sitting here at the 34,189 harmonic and moving back up. So we had this head and shoulders couldn't even get to the first target. Okay, so gonna keep an eye. That's actually the Dow. If we do have a little pop, gonna watch the Dow to see if that can get a sustained move, especially back above about 34,600. If it rolls back down, again, you see there the 34,189 on that harmonic. If it rolls back down, then you see 34.73 to 34.34 would be my next key area I'd be watching for a bottoming formation. Other than that, also getting to a cycle bottom. Also, now this is sort of interesting because this could definitely be attainable if it does rally tomorrow. A close above today's high is a buy signal in the Dow. Russell. Again, I was watching for this 2020 area breaking below that. There's nothing I'm really looking at on the Russell except to watch. There is this mess of a bottoming formation right here. You can still technically do something with this. You can see it on the 15-minute. So I'm just using this because it's so sloppy as some targets for any rallies. But where would that take it back in the bigger picture? That would just be a return to this prior 2050, 2053, 2055 area. So that would just be a quick little bounce play into resistance. Crude finally broke below. We had the double triangles. Broke below this one, then we retested this area. Remember also, I forgot to point out this morning that remember I think I talked about this yesterday with the last little move up, and we closed below 62.5. So I was watching for the price action to come back between the 100% 87.5 where it paused, and it eventually broke back down. So now this prior major support is resistance. So I'm going to be watching again. I think we're going to go into a longer term consolidation pattern once we find a low. I'm really focused to see how it reacts around this 93.50 area. So longer term, we're in just a major consolidation pattern. There's no long-term play. Everything would just be now starting to, once we get some key support, trading around a core position in there. Gold, nada, nothing, zip, zilch. Consolidation, nothing to do there from my point of view. Silver, nothing to do here. Bounce off that key level, but still, that's I talked about this. If you're trading on a core position, that's a good entry level, and we bounced off of it today. And then another ad would be around 23.79. Again, educational purposes only. Notes. Finally, looking like it's trying to. We have some divergences setting up on the daily basis. Might be having a short-term cycling bottom, and we had a little mini double, which was a really nice trade. Little mini double triggering, nice little pullback. You see spiking up, and then just the volatility with the FOMC minutes. With that being over, the next little targets on a continue rally would be not those, but I'd be watching about 121.08 to 121.09. Where does that fit in? That fits in once we start getting into the 4-hour rotation zone, especially getting above about 120.30. Then I'm definitely targeting this 121.09, 08 to 09 area into the rotation zone. And again, massively oversold, far off from the rotation zone. So could we at some point get a decent bounce in here? Yes, we could. By the way, if you're going to ask about the yield curve is starting to steepen. Now remember, this is the major thing. Now it generally steepens into a recession. We'll find out over the next little bit if this is indeed the low. But remember, it steepens into recessions. It inverts, then it steepens. Okay? So don't be caught off. It's already done the inverted. Now here's what I'm talking about. We're going to see if this is low. This is an example from 2006. It steepened, then it made a new low, then it really started its steepening. So don't get too caught up in that. We're already on track probably for that recession with this kind of pattern. Whether it dips back down and then forms another low, then really starts steepening, or whether this is it, we shall find out. Just wanted to point that out too. I already did the VIX dollar index coming up to our harmonic cluster. So finally breaking out of the horizontal channel yesterday, coming up to the harmonic cluster and pausing right there. At this point, we can update. Even though we don't have a decent pausing bar, we'll probably have to do it again. If the bullish move in the dollar holds, these are the next key. These are the next key levels. Your minor levels being, what did I do there? 99.99 and then 117. Now I'm going to be watching if we do start to rally on a pullback to see if the daily rotation zone holds, and especially this is my key area I'm watching on the dollar index. Somewhere in here between 99.29 to 99.05. Custom mega cap index down to the first target on this double. So I'm going to watch for the potential reversal on this and see how hard we bounce. That's really what I'm focused on. So tomorrow I'm going to be watching this for about 75.04. And if you want to build this yourself, it's Apple plus Microsoft plus Tesla plus Amazon plus Google. That's what I watch with that one. What else? Tesla today. We'll be continuing to watch for the full gap fill. The partial gap fill, again, breaking back it down below here. Not quite yet with the full gap fill, but if you were playing along at home, we'll just review this. See, here was the 62.5 move below it, even on your 15-minute move below it, and then coming back down to that 87.5 and getting a little bounce with the rest of the market. So still going to be watching for the final roll over there. By the way, if you really need a signal, aggressive buy signal tomorrow morning on a close above the aggressive signal on the daily on a close above the daily, and that would be out of the rotation zone, so that would be a rotation back up play. I would not be watching for anything like around major new highs. I'd be watching for a bounce play So that would be a very short-term play. 4-hour mode would be a close above the 4-hour high in the morning, 1079. What are my thoughts? Let's see. What I'm hearing from many folks is the Fed can't say anything more than we already know or expect. Many of us think the worst is behind us. I think the market's in for a longer-term world of hurt once we get some of this still buy the dip mentality out of the way. Well, this earnings, no. Fundamental investing is a ways off, I still think. It's got to go through a lot more pain. I think once we get some of these PE levels back to reasonable areas, if it even reverts more and people start to pay attention to what a company's actually somewhat should be valued at, that's when the shift is there. Still, it's not there yet, Abraham. Sure, can I discuss the stop placement on the Dow head and shoulders pattern? If you want the fail-safe trend line, the fail-safe trend line would roughly be all the way up here. However, you start getting back above about, if you want it earlier, or if you are trying to play this to the short side, this is not the one I liked. I like the double in the Nasdaq and the one in the S&P better because the Dow's been holding up. But if you want a key area in front of there, if we get that close below about 34,700 on a 1-hour basis, then this is over for me. Why? Because it favors then a retest this high area, which would be the fail-safe trend line, and I wouldn't want to ride this all the way back up. So that's how I do it, because since the fail-safe trend line's rather high, watch for, remember, if you get the close above the 62.5 on this recent downswing, that favors a return to this high area, which is roughly your fail-safe trend line. And if you went even more conservative, it would be on the bigger swing, but that would be roughly around this fail-safe trend line. So that's why I'd use this closer one. That's a little way you can use the harmonics to gauge where you want in a position, because even a roll up into here, into your 4-hour rotation zone, could be a roll back down. Crude oil weekly double top still valid? No, there's no weekly double top here. Again, the harmonics are still valid, and I'll be utilizing those if we break below about 92. Because that would take it back to major support. Now remember, we're at the first level of support with this channel, and then the next major support with this breakout before it formed this channel. So that would be major long-term support for me if we broke down there. And I'd be looking to establish a really solid crude position then. QQQ inverted head and shoulder, inverted on the weekly. It would be a wrong directional sloping neckline, and this is a double head thing. Again, if you're watching for upside price targets, you still have this double down there. But I do not like that as a head and shoulders on the Qs. It doesn't fit my rules. Nvidia. Welcome, Ken. Nvidia. Again, we triggered the head and shoulders. We talked about that. The head and shoulders triggered yesterday, continued today, hitting the second target, retesting the first target. I have nothing bullish on this unless we start getting into the gap fill. You can see here bouncing off that 50% level. So tomorrow, if it gets above about 249.65, I will pay attention to it. And then above 252.14, start watching for the gap fill, and that's not just for tomorrow. Now, if we make new lows, you have to drag down this, and it still does favor some lower price action in Nvidia still. So keep that in mind. But the first and second targets are hit. So stop reduction and taking some profits off the table are already hit. So this would not be turned into a losing position. And Nvidia, I did, even besides this, remember the ones I was watching for any plays were Apple and Meta, and they hit their little plays earlier. And now there's nothing. Apple just barely triggering the lower probability head and shoulders. So if you do have a sell-off in Apple, 168.06 would be my target. However, we also have a potential gap fill play and a daily buy trigger above today's high. So again, conflicting signals in there. This would only be short-term plays for me. Oh, well, thank you for checking out the Futures Ed podcast. Again, Bob will be on tomorrow afternoon. Let him know since he was producing it. I'll let him know what your thoughts are. Boeing. Oh, we haven't looked at Boeing in a while. I really just... Boeing, you have a little gap play to the upside. Other than that, I am not bullish on Boeing with this price action. I'd be more inclined to watch for a retest this 172 area. But short term, if we did bounce, I'd watch for that little gap fill, and running up to 188 would be a looking to sell it again. Not bullish on this stock. Breaking down, could not hold this key support. Coming down first harmonic, coming back up weekly rotation zone. That's starting to separate and rolling back down. I'd be really watching for another, unless you get that short-term little gap fill, I'd be watching for a return to 160 area, and then probably going to longer term, I'd be watching for this significant level about 145. What would change that? What would change that if we came back down here? I wonder, would that be... I'll have to see. If we get a bottoming pattern around here and a rally, that could change things, but you have a fair amount of overhead resistance. So this is not what I'm interested in. There's lots better pickings out there, but if you need to trade it short term, gap above today's high. Longer term, roll over and watch around support around 170 to 172. Boeing has earnings in the 27th. So that's still, what, 3 weeks off? Lots can happen in 3 weeks. Lots can happen in 3 weeks. So you could still, even if you're just going to rally a bit in the earnings, you could still come down here and get a better bottoming pattern than this. This is just a mess right now. More Fed speech tomorrow. Yep, we already talked about that. So you got to stay on your toes, but I think they're going to keep trying to talk the market lower, and we'll see how it absorbs it. Oh, you are entering back into lockdown in Toronto? Oh, boy. No more lockdowns. All right, my thoughts on the Fed. They surprised with their 95 billion of tightening. 35, I think it was 35 billion in MBS, 60 billion in treasuries. So that surprised. That was higher than expected. I know the upper end of the tightening range was expected to be about 90. So 95 was more hawkish than even the upper end anticipated. And, they're still going into the multiple rate hikes. I mean, how many now are roughly priced? They're not really priced in yet because the market's holding up so well, but how many are expected? I mean, 8, 9 at least. So the rate hike thing that's been digested. It was the tightening on a faster pace, and they're letting people know we're not going to prop up the market, and we actually want the reverse wealth effect that we created on these risk assets. We want to unwind all these risk asset pricing is what I think they're telling people, that, hey, you're not going to get the magic Fed put. So if the market sells off, the market sells off. We're actually not going to stand in the way of a market sell off. That's my overall take. And I still think the market's just shrugging it off, at least in the short term. I think it will not in the longer term. I still think the pain trades to the upside in the short term. And then, we'll see. Does that prohibit the downside price action? No, not at all. That's why but any downside price action is still, we're trading into major support levels into earnings seasons, and we can still see a couple pops higher. That's what I'm watching for. Now we're going to keep seeing the market. I mean, that's where you got some of the volatility this afternoon with the stuff about the quantitative tightening more than expected, but still, I mean, I was watching the VIX, and look at this. Yeah, you got a little volatility in here, but look at this. Is that a fear chart to you? We spiked up in the morning on the gap up into the opening sell-off when it broke from the key range, but then the rest of the day, there's no fear yet. So I still think you have a bunch of traders who don't fear the Fed, because they're always saying the Fed's going to have to get out of the way. The Fed's going to have to get out of the way. I think they're saying different. I really do this time. I think they are stating things differently and saying, hey, we're not going to sit here and prop the market up. And they're repeatedly saying it in the way the Fed says it. So that's, dip buying will not go away until, and I even think this is true on some of these bigger traders that even work for some firms that are still buying the dips. Some of these junior traders, they're like, I think they're going to roll over, play dead. I think they're going to get a couple hikes in. We're going to have recession. The Atlanta Fed model for GDP is back down to 0.9%. They're thinking, oh, that's going to go negative. We're going to hit recession territory, and Fed's going to have to start cutting again. Which you start cutting and inflation's still right above 5%, 4%, you could really get it majorly entrenched, which will crush stuff in this country. But, it takes a lot of people. And what's interesting to me also, and I don't hear a lot of people talking about this, you have a lot of people who have, especially older people, who have their assets completely in stocks. Because there's they might short-term savings to pay for stuff, but longer term, like they could be in there. I know a bunch of people, 60s and 70s, they're 100% in stocks. 100%. You imagine now what happens with inflation. They're already getting hurt and stocks, I mean, we've had the sell-off and then the bounce, but you start getting a major sell-off and you're in your, let's just say you're even 65, you get a major sell-off where we get the S&P or something, or Nasdaq, or both drops like 40, 50%. You don't have, it could take a while for those assets to recover, plus you're fighting inflation. And I don't see, that's where I think it gets really interesting with everything. And I don't see anybody talking about that, because when you keep savings rates suppressed, people chase returns. So that's where we sit. So it's going to get very interesting. That's why, you're going to have to stay tuned to Path Trading to see what's going on in the markets and get our thoughts. Are we always right on everything? No. Are the patterns always right? No. But they're right more often than they're not. So what's here? Let's see. You like Airbus more than BA. Let's just take a look at it. Let's just take I haven't looked at Airbus in literally forever. wouldn't be overly bullish on this stock either. It is holding up slightly better than BA, but you break below about 102 again, would not want to be owning this stock. This is an ugly pattern. Whew. So this, yeah, it's holding up better than BA, but I would not want to be owning that one either. How low can Tesla go if it goes below the gap? Let me pull off these little levels here because we don't need them. Where am I watching for the next key area if it falls below the gap? Longer term, let me change color here to, I gotta switch a color so I can see it. There we go. Longer term area, let me just see based off the most recent swing, which actually, longer term area, I'd be watching 935 to about 955 area for a potential support. The real killer comes on a closing basis below about 905, 904. That's the area, if you're bullish, you don't want to see. That would be a retest of the lows. Your key support area would be right in here, though, with the rising rotation zone and right around the 50% of this run up. So that's the area I'd be focusing should it continue a pullback. So that was the weekly. Daily, if it comes down here, I will watch for a little. If we sell off tomorrow and fill the gap and we hold at 1,000, then I'd watch for a little short-term play to the upside again. Now remember, you do have this gap to the upside also. So if it fills this gap to the downside, which statistically favors it, I will watch for the first little support around 1,000 area on a closing basis, and then there might be a potential like %B buy signal, which could be interesting for an upside gap fill play. So there, when are earnings projected? 20th of April. So yeah, there could be a short-term play in here, 1,000. If we break below that 1,000, then I'm back to 955, 950. I'd actually bump it up slightly from that 955 to about 955 to 960. So those are the two key levels. My first level then therefore would be 1,005. QCOM back at the look. Let's take a look at QCOM. Yeah. Actually, this is still a valid double too. This didn't invalidate it. It's still a double, but would I be touching this? No. Not unless we triggered. This is why it's so dangerous to try to front run. Also against your daily rotation zone. Where are your next key levels? That's an interesting. If this continues to sell off, I'd be watching for some support right around. Look at that. Support ledge that it broke out from, harmonic. Other than there, the only short-term play would be something with that gap fill. But then you have the rotation zone to the upside, so it would just be a very short gap fill play for a potential rollover. Long term, I'd have to get above 160, 130 for me to do anything long term with it. Thanks for pointing that out, Wavy. Mike, do you prefer the futures for core positions in silver and crude or something else? Crude, yes. The micro futures especially. For silver, I really like. This is my go-to for silver trading. The physical silver trust. I love this because they actually hold the silver. And this is, you could trade, it's a stock. And this is where I love to trade. See here, just I have the harmonics on here because right now it's buy around here. short-term sell around here. Now, if it drops back down, here's another major buy area. You can see how it trades between these key levels really nicely, I should say. And that's where you can trade back and forth, back and forth. So that's my go-to for silver. For gold, if you, it's PHYS. Again, Sprott Physical Gold. Another one. You can harvest price action back and forth while remaining a core position. So if it really gets a run on, you can hold it. But when I say really gets a run on, see, even this last little run up, you have to unwind part of it until it starts getting above 1650. Even above 1650, I'd be looking at harmonics to take something off and then re-add on a slight pullback unless we had massive momentum. And then I'd keep a core just for a long-term run higher. But this, look, it's gone nowhere. It's got a slight upwards bias after this pullback, but it's gone nowhere. But you can harvest between levels and trade between levels repeatedly on this. And it's a stock. I really hate COMEX. And you got the CME futures, but I don't. I really like to trade around the core position in the metals on that. That's my favorite. But for trading crude, I don't like trading USO or anything out. It's the micro futures or the mini futures. Micros are really easy though, because you can really dial in a position size accurately. I got you, Rich. I got you. Like everybody, I agree. Boeing's got. Did anybody watch that Boeing documentary? Did anybody watch that? That was super interesting. That was super interesting. If you haven't watched it, what is that on? Was it on Netflix? The Boeing documentary about their 737 Max and all the shortcuts and all the stuff they buried to try to prevent it from coming out is a fascinating watch. So I'd highly recommend it. Sorry for going off the topic there. I have no idea how I even traded before finding out about these levels and harmonics. Nobody else teaches this because it's me. You know, so if somebody else is teaching it, they got it from me, literally, with these exact 8 harmonics and the way I do things. I've never seen anybody teach it. It was not developed by anybody else that I've ever known. If somebody did, they did it completely independently of me, and I have no idea who they are then. You have a great one too, Wavy. Okay, thanks. There's confirmed monthly double bottom on your PSLV. I'm established in both PSLV and PHYS. Thanks a bunch for all you do. And again, you can easily trade portions of that core position and then hold on to a core if it really starts getting. And you can always add to your core position on major breakouts. So keep that in mind. That I hate just sitting on stuff that's, you can look with the harmonics, you can trade around these levels. And what did you say? You have a monthly double on the PSLV? Monthly. You're watching this. Yes. That is what's interesting enough is it still's not technically triggered on a closing monthly basis. That's pretty fun. What happened there? That's pretty funny. Well, look at that. Where does that target? I mean, these are 2 within the candle bodies. I just look. So you could even use those for on rallies, longer term rallies. You know, build your core position in here. Get up to 956, take a little off, pull back, add some back on. Rallies to 991, take a little off on a pullback, add some back on. And you can use these same techniques. So And also, I love this pullback area, 769. If we ever get back there, that's another back up the truck moment for PSLV, because you can keep a decent tight stop on there below the 62.5. Agree on the crude too. Well, there you go. Really hard for me to position size properly on the silver future, so I stay away from them now. Yeah, that's where you can look at the price of this. I mean, PSLV, you can position size all day long in this because of the price. So it's way better. You know, and don't ignore, because I'm a huge uranium bull. Do not ignore now the this look at this on the you have to trade this on the Toronto exchange, but this, I mean, this is really breaking out now, and I've talked about how bullish I am on uranium, so keep in mind that's another one that can still on pullbacks, key pullbacks levels, and this is volatile, so I really like the big drops into and catching cycle bottoms or percent B moves, and then just riding it higher. Here's your next major levels. But Sprott is another one to watch for on the uranium on the TXX. There's your next levels. That would be move up the stop, 2082, and any pullback to daily rotation zone is still a buy. All right. Hard to be a bull now. Quantitative tightening, 50 basis points. I think we're going to shift in a bit back into major bearish mode. We shall have to see with earnings starting next week if we get that little run in the beginning of earnings season, and then we start rolling over. That's what I'm going to be focused on. You have a great evening too, Josh. With that, I will wrap it up. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers and members, please do come back and leave some comments and like the videos, and I will be on tomorrow morning, 8 a.m., bright and early. Remember, multiple Fed speakers tomorrow. So if you don't have a trade, sit on your hands. If you do have a trade, manage your stops and be prepared for even more volatility. You are welcome, Eric. I will talk to everyone later. Bye for now.